Daniel Kahneman, is it more profitable for day traders and active traders to use their system ones and think fast, and have mutual fund managers and long-term investors use their system twos and think slow?
Well, you put together day traders and active traders. I draw a big distinction. The people who trade on micro, who hold things for minutes, they probably develop a skill, like basketball players. And they should think fast if they have had enough experience. Active traders, I have my doubts about active traders anyway, but professionals should probably think slow.
And then, does the size of the trade matter, or the importance of the trade? If this is a very important trade to you, does it skew the results?
Well, by and large, one would expect people to think much more carefully when they do bigger things. Oddly enough, this isn't always true. Beyond a certain point, I think people follow their intuition when decisions are very large, and that can lead them to mistakes. Unimportant decisions, people should slow down, but there are situations when your information is very poor, and slowing down doesn't help you.
So is the whole idea of a skillful stock picker an illusion? Should people just stick with the indexes like Jack Bogle says?
Oh, that's certainly my belief. I mean, I think the evidence, and I'm not a professional on that, I'm just citing others, but there are two things I know. That is, the consensus of opinion among professionals is that if there is skill, there is very little of it, and very few people have it. And on the other hand, many people believe that they have the skill, and most people believe there is skill, and that's an illusion that we can explain.
So why are money managers so richly rewarded? Does that factor into anyone's thinking or decision making?
Well, they're richly rewarded because there is a lot of money being generated in this industry. It's generated in part because individuals lose a ton of money investing on their poor ideas, which allows professionals to put aside enough money to pay themselves very large salaries. I mean, that I think there's no question that they're rewarded for it. People are rewarded even for chance performance on the street. No question about that.
And what about the idea of Warren Buffett? And he's consistently beat the market because of fundamental stock picking. Or then you have James Simons from Renaissance Technology, who uses computers to beat the market. Are they outliers? Are they lucky? What are they according to your studies?
I'm sure that Simons is not lucky. When there are algorithms that do micro trading and that trade very quickly and that pick up on patterns and that see when the patterns disappear, no doubt in my mind that by using algorithm, if you have a ton of money, you can make money. Warren Buffett I haven't met any professional in finance who will tell you flat out there is no skill. And Warren Buffett doesn't buy stocks. Warren Buffett buys companies. And undoubtedly, he knows more about the companies than the average investor. And so at this stage of his career, Warren Buffett isn't stock picking. And his successes or his occasional failures teach us nothing about the individual stock picker, working from home.
But still, there's a tremendous amount of interest on Wall Street in decision making, in books like yours, in books like Malcolm Gladwell, Blink, or Frank Partnoy, Wait. Why do you think there's such interest in behavioral economics right now?
Well, for some reason, that actually I don't know. I mean, it's very clear that behavioral economics has touched a nerve. People know, I think, that there has been a problem with standard economics and with standard finance, that it hasn't predicted some major events. And so there is an opening for behavioral economics. And the psychology of decision-making has been very active in the last few decades. So you have a torrent of books on thinking. People like to think about their own thinking. And I think people like to delude themselves that they can improve themselves a lot by thinking about their own thinking. So this is happening.
Do you think it's better suited, behavioral economics, towards marketing, to figuring out what people are going to buy, as opposed to predicting the future about stock prices?
Well, certainly. I don't think that behavioral finance sort of is a theory of future stock prices. It tries to explain errors that people make, biases in people's stock picking. That is the domain of it. Really, I don't know of a theory in behavioral finance. Again, it's not my field, but I think I would have heard if they had come up with a behavioral theory of stock prices. I would have heard about it. I don't think there is one yet.